In this video, we'll be talking about Amazon seller mistakes. The mistakes sellers do when they run their Amazon business, and we will have three experts sharing different specialization mistakes specific in their expertise, and they will explain how you can avoid those mistakes and what you can do. And this session we're doing actually with three experts representing three companies which are sponsoring the upcoming Orange Klik Barcamp event, which is happening in February 23rd, 24th in Lisbon, in Portugal. And these three companies sponsoring this event are Nextoria. So Nedko from Nextoria. Hello, Nedko.
Hi, Augustus. Thanks for the invite.
And Jacob from AVASK.
Good evening, everyone.
And Alex from Chern Co.
Hello, everybody.
So let's do a quick introduction of everyone. So let's start maybe with Alex, because Alex was actually moderating our previous event, Barcamp event, and Alex comes to other events of ours. So Alex, introduce, how do you help Amazon sellers and what do you do in Amazon space?
Yeah, Augustus, thank you for having me. Normally, I would be specializing in company registration services. So anybody who's looking to register a company in Europe, we are based in Ireland, and we basically open companies in Ireland, UK, Estonia, and a couple of other jurisdictions. And we also specialize in trademark and tax compliance. So that would be me.
Perfect.
And as a hobby, I do a moderation of events, conferences, and I'm looking forward to the event at the end of this month in Lisbon.
Yes, and actually Alex moderate our few other events from Orange Klik, which is in Prague, European Seller Conference. There was PPC Congress in Amsterdam. But let's go back to our experts. So Nedko is from Nextoria. Can you tell us more about what you do?
Sure. Hi, everyone. Very nice to meet you all. I'm Nedko. I'm from Nextoria. We are an M&A advisory company based in London, helping sellers on their journey when they decide to exit the business and to achieve the best possible outcome and the highest possible valuation. So that's what we do.
Perfect. And the third, last but not least, is Jacob from AVASK.
Thanks, Augustus. And yeah, good evening, everyone. So at AVASK, we help sellers expand across multiple markets and keeping on top of regulatory issues. So, that's international tax compliance, customs requirements, so importing and exporting goods, specialist in e-commerce, EPR, essentially any new regulations that come into force. We help the e-commerce sellers in those particular markets and make sure they're keeping on top of what they need to keep on top of.
Perfect. And those who are wondering what is this Orange Klik Barcamp, check the link below in the description. And also, if you will have any question to our experts during this session, don't forget to either use the live chat if you're watching live, or leave your comments below in the comment section, and we will ask those experts to come back later to your questions. And we will talk more about what's happening in Lisbon in February 23rd, 24th in Orange Klik Barcamp. But let's move on with the content. So we asked each of our guests to share three mistakes Amazon sellers do and how they can avoid those. So let's start with Alex, because Alex, some of our audience might know Alex, and what you have to share.
Yeah, I prepared a couple of slides so that we get a little bit of the visual in addition to the points I'll be making. I guess I'll be speaking for about 7 to 10 minutes and hopefully to take some of the questions in the end. Now, we already did the introduction, so just to give a little bit more context, I'm also an Amazon seller. I run a private business, so apart from my consultancy business, I'm also a seller. So I understand the pain points of Amazon. And we have, at the moment, close to 90 companies that we basically assist every year, and they would be a mix of e-commerce, Amazon, Shopify sellers across Europe. That would be kind of just on the introduction side of things. doing this since 2009, so it's been kind of 13 years since I'm in the accountancy company registration, and Amazon maybe since 2017. So is it now nearly 8 years with the Amazon space. Now, the first mistake, and probably the most common mistake that I wanted to talk about, is forgetting about business basics, which would be essentially financial forecast. And by financial forecast, I mean preparing your profit and loss account and cash flow statement. And we see so many companies actually failing. A couple of young, ambitious entrepreneurs coming to us, hey guys, we really want to start Amazon business. We have a great product. We have a great team, a lot of passion, energy, and we register companies for them. They start operating and then ran out of money. And it wouldn't have happened if they did a little bit more planning, a little bit more resources. So here I'm just going to put a couple of tips, things to consider, and essentially how to avoid. And obviously, when you are planning to start a business, you need to make a list of all your sales and expenses that you are expecting to get certain sales in the first months, in the second months. And we typically recommend to go as far as a minimum as 12 months. But if you really want to have some sort of longer vision, between 2 and 3 years. So minimal forecast would be required for the 12 months ahead of time, but we would recommend between 2 and 3 years. People sometimes forget to include taxes. So you think I'm going to get €1,000 this month, but you are not deducting taxes at the end of the day. You also need to essentially account when the funds will arrive, because sometimes we see projections by companies that say, this month I'm going to get certain amount next month, but you forget sometimes that clients pay with a delay or they don't pay at all. And this is something that you also need to consider when you're doing any sort of financial forecast, that your sales could be coming in two months later, 3 months later, and then take also into consideration payouts. Amazon sometimes doesn't pay you on a weekly basis. They pay you with a little bit of a delay. You also need to essentially account for unexpected expenses. So, after you did all your forecast, if you are a new person in forecasting and doing budgets, we normally recommend doubling on your expenses. If you think your expenses are more or less accurate, you still need to add another 5 to 10% for something that you didn't think of at this time. And this is a healthy kind of thing to do. Seasonal fluctuation, especially with Amazon sellers. You think that you're going to have a steady income on a month's basis, but it could be that you're going to get 70 or even 90% of your sales in Q4. And that's something, again, that you need to account that, you're going to have a profitable business, but you need to manufacture, produce the product, deliver it to the Amazon warehouse or whatever. And then you're going to get all the sales in just 3 months around the Christmas time. So again, this affects your cash flow. You need to have money before you start. And what I recommend to use little tools like LovePlan or QuickBooks Cash Flow Forecast. They are essentially little tools that could help you to do those projections. But if you are not a tech person, getting a basic thing such as Excel template and just playing with Excel template. And of course, if budgeting, doing forecasts, and planning is something that you are really, really not comfortable with, then seek professional advice, talk to someone, and get help. After you're doing forecast and you think, okay, now I know how much money I need at the beginning, what would be my profitability, when the money will come in, when the money will run out, I'm just leave it and forget about it. No, the final thing would be, once you make a forecast and you think it's realistic, then compare and review it on a monthly basis and see how accurate or how far your guess was, and essentially improve next time. When I started doing my forecast, everything I was planning for was twice incorrect. Now when I do my forecast, the difference is just kind of less than sometimes 5%, because I'm getting better at it every year. So you can do it too. So that's mistake number 1. We're going to go to mistake number 2, neglecting to register and to collect tax. And again, this is something that now is very common with European sellers. The changes to the European VAT legislation came in kind of in June last year, and it's still, previous year, and it's still coming up. Some businesses are only catching up. And we see now some businesses that started selling, for example, in UK, and they were selling only there. And from UK, they started selling to the rest of the Europe, but they forgot to register for European VAT. And I believe this is something that our next speaker, AVASK, could also cover on. But we see now businesses that are essentially not registering for European VAT, and that's an issue. So a couple of things, again, to consider and to avoid: fines, penalties that could come in as the result of not being registered for tax. We also see now things like that one European company could actually go after businesses in another European country if they know that company hasn't submitted tax return. We now see, for example, Slovakia is chasing Irish companies for not submitting tax returns on time, which doesn't really make sense, but that's the way it is. Mixed tax benefits: if you don't file tax returns on time and you don't claim certain benefits, you could actually lose them. And that's another thing that you need to consider. Additional cost to manage: you will need a proper accountant who specializes in European tax legislation. So always incorporate not just the actual tax portion, but also the cost that you will need to pay accountants or other professionals to manage it. And I certainly recommend people to get familiar with European regulation on taxes, and obviously keep up to date on what changes are happening globally, depending on the countries that you're actually selling to. Registering for taxes, of course, is the first step you need to do if you're subject to them, but then collecting taxes. Your website, Shopify, for example, could be a little bit outdated, and it turns out that you're selling in Germany to customers who are based in other countries, but you're not collecting tax. And therefore, it's going to be a little bit difficult for you to calculate. So you will need also to do changes to your e-commerce website. Marketplaces, they usually are good. They do collection of taxes themselves to a certain point. But if you're selling on your own website, you need to make sure that your website collects tax and generates proper records. If not, you will need to do it manually or again seek professional advice. Utilizing tax software, it's something that could really, really save your time. And there are many great tools out there. I mean, I'm not going to be going through the list of solutions, but QuickBooks, and then there is plenty of AX2 for Amazon sellers. There's many tools and plugins out there that work with e-commerce sellers and especially Amazon sellers. Subscribing to tax news, again, there's something to keep yourself up to date. Or again, if it's something you are not really looking to do, just seek professional advice and get somebody to do it on your behalf. Moving to the final third mistake that I would like to cover today: using a cheap accountant or not accountant at all. If you have a little bit of expertise and desire to do things yourself, it's actually possible to do it yourself. And we see some businesses who actually maybe are only starting, they don't have a lot of transactions, they don't have complexities, and it's possible to do things yourself. Okay. Now, you could automate certain things by using, again, tools that integrate with Amazon, Shopify, eBay, and other marketplaces. And what we also see with some of the customers that come to us, sometimes they have an internal accountant. So maybe you don't necessarily need to outsource full work. You could do it yourself. You can do part of the work yourself, or you can actually hire a person who would be part of your team, and they essentially will be extracting reports, working with Excel or working with other accountancy tools, and then only have like a final tax declaration or VAT filing that is actually outsourced. So again, there is different strategies depending on your knowledge, access to accountants in locally, or hiring somebody remotely. Now, when you actually, if you decide to outsource and hire somebody, the strategy I would advise is research potential accountants. Look for experience and referrals. Again, sometimes a good accountant who works with IT companies will not be a good fit for Amazon seller. You need somebody who understands Amazon pain points. You need somebody who understands European VAT tax compliance. This is the sort of experience you need to look for. Check referrals, check references. Again, ask in the community, like, guys, whom do you use? Can you recommend someone that I could use for myself? And try to find somebody that way. Expensive, not always good. Sometimes you could find the best accountant, but they don't specialize in Amazon sellers. So why would you take that accountant in the first place? Last but not the least point, choose someone you can trust and evaluate communication. What you could do is send a couple of messages, and if your accountant is slow responding at the initial interaction, they probably will be slow responding when you start working with them. And that's not something you're really looking for. You want somebody who is responsive and fast communicator. So these are a couple of things that I wanted to cover. I just wanted to reach out to all the attendees out there that if you guys ever come across these 3 mistakes, or you want to talk them further, just feel free to register, and I would be happy to have a one-on-one chat with you sometime before the Orange Klik Barcamp event going forward, just to answer those questions. Or let's answer them right here, right now on this call.
Perfect. Thank you very much, Alex. And next we'll invite Jacob from AVASK to share his insights. And I wanted to mention that, thank you, Alex. We'll see you a bit later. And I wanted to mention, if you have questions, don't forget to write them in the chat. And also don't forget to like and subscribe. Let me show you a small reminder. And also, if you are in Europe or you want to fly to Lisbon, Portugal, make sure you visit Orange Klik Barcamp, which is happening February 23rd, 24th. There is more information below in the description. And let's invite Jacob from AVASK. And let's listen what you have to share.
Thanks, Augustus. Thank you very much for having us. And Alex, I think that was some good content, some really good advice there. Make sure everyone, you are listening, taking notes. It was difficult for me, actually, really kind of pinning down 3 mistakes that Amazon sellers make. And it's not, just solely around Amazon, it's e-commerce, because especially, I've been in the industry for 4 years now. When I started talking to Amazon sellers 4 years ago to talking to them now, it's a completely different situation in terms of kind of the industry I'm involved in, but also many other industries and many other services. Because I know there's been lots of changes, lots of legislation updates, whether that's VAT, whether it's customs, whether it's like extended producer responsibility, which are kind of all like European regulations and things that are coming in and things that are changing. So, there's lots of things that you need to keep up with, and there's also lots of things that have changed, which has essentially made people significant mistakes in areas, because it might be the fact that they haven't actually done the research, or they don't know about the changes, so they haven't kept up to date with things. I've chosen 3 things directly. So, the first thing I'm going to talk about is incorrectly calculating your cross-border VAT transaction. So there's kind of a few different ways that I would say I see this happening. How you kind of incorrectly calculate the VAT on the cross-border sales. And really, a lot of the changes has been in the last year. I think, as Alex mentioned, there was some new legislation changes which actually came into effect July 2021 now. And essentially, the way that VAT is calculated in the EU for cross-border sales changed. And it's also changed slightly for how it's calculated in the UK for goods that are sent B2C directly from outside of the UK. So it's quite a big issue. One of the factors is, first of all, if we're looking at Amazon, if you've got Amazon, you've got to consider whether you're EU-based and selling in the EU, or whether you're UK-based and selling in the UK, and kind of where you distribute your products from, because there's lots of different variations. Since Brexit and since the 1st of July 2021, marketplaces can have more responsibility for collecting and remitting VAT on behalf of sellers. But it is case dependent. So as an example, if you're a UK-based seller selling on Amazon in the UK, you have to collect the VAT, you have to remit it to His Majesty's Revenue and Customs every quarter. Whereas if you're, say, a German seller, a German incorporated company selling in the UK, Amazon will deduct it for you. Now, obviously, that people suddenly think I don't have any responsibility to report because Amazon are doing it all for me. They're doing the deduction. And it's not just Amazon, it is online marketplaces. But you still do have to report. You have to collect the data and you have to remit zero-rated domestic sales essentially to an online marketplace. So there still is reporting to do. So I think that's one of the keys that you would need to take away. So although there is more marketplace responsibility, you have to ensure that the reports that you are doing are still being submitted depending on your various situation. And then flipping over to the EU is kind of the opposite situation. If you're an EU-based company selling in the EU, Amazon won't collect and they won't remit the VAT on your behalf. But if you're a UK-based company or just a non-EU-based company, then they will. So there's different situations. And then when you're going to your own online store, there's no marketplace facility, so you are fully responsible. So it's just ensuring that you kind of know the differences, speaking to an expert and making sure they understand your situation so they can structure the advice based on your sales channels, where you're incorporated, so on and so forth. So another thing is not having a local presence. So that could be incorporating a company or not having a local representative, and this is across different areas. So I myself, I run a customs department here at AVASK. So we help e-commerce sellers import and export goods out of the UK and into the UK and out of the EU and into the EU. Now, since the changes, since Brexit, since Amazon don't distribute goods between the UK and the EU border automatically, sellers are responsible for directly inbounding stock if they want to be part of like the pan-European program. So they allow Amazon to distribute stock across the different markets, which obviously now doesn't include the UK. But the reason that I mention it is because as soon as Brexit occurred, you had lots of sellers from all over the world who probably used to use the UK as the main distribution hub. You import to the UK fairly easy. It's not the strictest country in terms of imports, and then Amazon would distribute from there to the likes of Germany, France, Italy, Spain, Poland, Czech Republic, etc. But now they stopped doing that. As of Brexit, you would suddenly send goods directly into, say, Germany, and they would get stuck at customs. So you're going to need a representative. There's different types of representation across different services, but particularly for customs, you're looking at indirect representation, and that's to essentially take joint and several liabilities. You have an EU-based company taking joint and several liability. And just to kind of give examples, I've had many clients who, they thought they were set up. Maybe they were selling pre-Brexit, they were sending to the UK. Suddenly, post-Brexit, they were sending to the EU. Goods were then suddenly stuck at the border. It could be, 5-10 days, a month, I've seen, or even more than that. And whenever goods are stuck uncleared at customs, there is significant charges. You will be getting significant charges. I've seen containers where they've incurred additional charges in the tens of thousands of pounds, tens of thousands of euros. So it's quite vital. But also, having a representative for product compliance purposes. Again, if you're not based in the UK or the EU, you're going to need someone to represent you product compliance wise. And again, that also can cause issues with customs because they see that you haven't got that representative. Then sometimes it can stop products from entering. So that's something you want to avoid. So making sure you've got that covered, you've done your research there. You've again spoken to an expert. I'd say a lot of these things, it's quite difficult to get the information online because it can be very situation specific. So trying to trawl the internet, getting all the information you can, and trying to figure out your own situation, I wouldn't advise it because I've seen many people try and do that, and then last minute they're trying to speak to an expert, and sometimes it's not too late to speak to them, but it's too late in terms of damaging your business, and that can be additional charges, products incompliant for whatever reason. So it could lead to suspensions on marketplaces like Amazon, can lead to customs charges, and there's other situations, but you want to avoid all of those situations at all costs. And then finally, I think not using the VAT deferment options available when importing. So I'm specifically talking about Europe, and the countries I'm talking about is the UK, Germany, France, and the Netherlands. So we handle imports to all those countries, and we see people going different directions based on their individual situation. But what I mean by not utilizing the options, certain countries you've got like deferment situations. So whenever you import a product into any country in Europe, really, you're going to be paying import VAT. So, you get the value of your consignment, which is like the cost plus insurance plus freight. That's one of the calculations to get to that value. You're going to have to pay import VAT, which is around about 20%. Obviously, the rate do differ depending on the country, but just to be simple, let's say 20%, which, if you're bringing in £10,000 worth of stock, 10,000 euros or 100,000, paying 20% upfront is quite a high amount. And now you have to then either offset that against your liability or try and reclaim it from the government. So obviously, offsetting against your liability is fairly straightforward. So as an example, you bring £10,000 worth of goods into the UK, you pay 20%, you pay £2,000, and then you have, say, £4,000 worth of liability from your sales in any quarter. So that's an easy calculation. So, it's your liability is 4,000, you take off the 2, you pay an additional 2. That's kind of a simplistic way of explaining it. But ever since there's the marketplace laws, so the marketplaces now have to collect and remit the tax. If you're solely selling on a marketplace, in a lot of cases there is no liability because it's been deducted. You still have to file those returns, which I was mentioning earlier, but your actual liability is potentially zero because Amazon have already deducted it from you, so you're just submitting the report. So in those situations, if you kind of take my example I've just given, you've paid £2,000 of import VAT, your liability is zero, and now you're actually trying to get the money back from the government. And that's not always the quickest. Sometimes it can take months. In some cases, in some European countries, that can actually take years. And if you're talking about many different imports, suddenly you could significantly build up the amount that's stuck with that authority. And e-commerce businesses, most of them run on cash flow, and then suddenly having that cash tied up for a long time where you can't use it. It's not an ideal situation, basically. So the countries that have options for deferring this, or good options, I should say, UK. So UK, you can use what's called postponed VAT accounting. So again, speak to an expert about this, but essentially when you import goods to the UK, you can postpone the VAT payment. And it essentially, just to keep it easy, it becomes a plus and a minus within the VAT return. And essentially the cash never really kind of leaves your pocket. So it's really, really good for cash flow. So it becomes paperwork. The Netherlands, you've got an option for, you've got 2 options actually. So in the Netherlands, you can apply for a license, which is essentially a deferment license, which is similar to what I've just mentioned in the UK. The only alternative is, or the only kind of negative to it is you have to put a deposit with the Dutch tax office. The other option with the Netherlands, and we see a lot of clients importing the Netherlands for delivery to Germany, is because as long as goods are coming in and then directly leaving the Netherlands, as long as you've got a customs agent who can declare in a certain way, then you can avoid having to pay the import VAT. It's through what's called limited fiscal representation, which is something that we can help with. So we deal with thousands of imports every month, which are coming in through the Netherlands for delivery to Germany mostly, and in a lot of cases that's Amazon. And finally, you've got France, which has introduced a really nice option, which is kind of automatic postponement. It's called the reverse charge scheme. So essentially, any imports to France, automatically they postpone the VAT, and it becomes an automated paperwork process. So yeah, I would say those are my main 3. There's lots more I could talk about in terms of mistakes that people make. But I think, the main thing around it is really kind of understanding your situation. A lot of the time that takes speaking to experts who kind of know they can ask you the questions and they can direct you in a certain way. And then even when you've got something set up, potentially looking to optimize, like what I've just mentioned about the VAT deferral. I still speak to a lot of clients who, they are unaware of these options, and it really actually has helped their business. Now they've had that conversation with myself or one of my colleagues, and they've now been able to improve their business, improve their cash flow. But yeah, that was me. But if anyone did want to reach out as well, you can reach out to AVASK directly. We can do free consultations. So, if you're an Amazon seller, you're an e-commerce seller, there's many different services which I've mentioned and more, which you can reach out to us at avaskgroup.com. And yeah, free consultation if you're looking to have a discussion, and we can evaluate your business and see where we can assist you.
And all your contacts are in I want to try to point with the finger on your banner. So
yes,
yeah, it's avaskgroup.com.
That way.
Yeah. All right. Thank you very much. And AVASK will be coming to Barcamp in Portugal as well. And let's have our 3rd guest, last but not least, to share 3 mistakes. And then we will have the final round. All right. Thank you,
right.
Nedko.
Thanks. Can you see my screen, I hope?
Yes, we can see. I'm activating. Yes.
Cool. Hi, everyone again. So I'm going to share about 3 common mistakes from the M&A advisor's view, from the M&A advisor's perspective. When you decide to sell your business, what are the 3 key things, 3 common mistakes that we observe most often. And the first one actually is seems to be a reoccurring mistake from the 3 speakers. It's about cash flow management, financial management, and accounting. It's basically accrual versus cash-based accounting. What we notice is that most sellers actually do their accounting on cash basis. What this means is that when you, for example, pay an invoice, only then it gets booked into your accounts. Whereas the accrual-based accounting, it means that when you receive the invoice, you book it in your accounts on the date that it was received. And the same way is also on the income side. On cash-based accounting, you book an income only once you get the money in your bank account, whereas in accrual-based accounting, you book the profit or the income once you make a sale. Why this is important? All of the potential buyers of e-commerce businesses require to see accrual-based accounting P&Ls, and also accrual-based accounting P&Ls not only for the expenses and the income, but also for the cost of goods sold. So my strong advice to you would be to make an effort and ask your accounting company whether you do cash-based or accrual-based accounting. Another reason why this is important, in many markets, there is legal requirement that once you reach certain threshold of revenue, you're obliged to do accrual-based accounting. And if you don't do it, you're subject to paying very large administrative fees if you get your business gets checked by the revenue agencies in the country. So really, this is very important. It shows the profitability in a much more real way. Also, when you do the exit, usually in cash-based accounting, you get to a lower, in most cases, you get to a lower profit level, which is the baseline for your valuation. So converting your accounting to accrual-based could actually increase your baseline, increase your profitability, which will essentially also increase your valuation, because you know that the buyers, when they buy a business, they take the adjusted EBITDA, which is your profit before taxes, depreciation, amortization, and they multiply it by a certain number, 4, 5, whatever they make an offer on. So the higher your profitability, the more money you will get when for selling your business. And that's also another reason why you need to have accrual-based accounting. But also some buyers will refuse to make an offer if you don't have accrual accounting. And also what is important, please make sure to ask your accounting company to make monthly P&Ls of your performance. So most of the buyers will require to see the last 24 months performance from your accounting company on a monthly basis in accrual-based accounting. That's kind of the first and most common mistake that we see, and that's really creating a lot of problems on successful exit processes. The second thing that we see as a problem is that most of the sellers are waiting for the perfect time to exit. Now, you've all seen that, probably, that graph. It's a graph of the maturity of a business or of a product. And the perfect time to exit from your business perspective is exactly towards the end of the growth stage and before the beginning of the maturity stage. Now, will you hit that perfect timing? 99% of the sellers don't hit the perfect timing. And if you believe that you are one of those 1%, then be my guest and give it a try. But it's very, very likely that you will not hit it. Now, even if you manage to hit the perfect timing from the perspective of your business and you exactly start selling your business at the end of the growth stage, there could be an external factor that will make your business not be in the perfect time for an exit. For example, last year, when the war in Ukraine started, everything stopped. The buyers completely stopped making investments to see what's going to happen with the markets in the next few months. So again, even if you think you were in the perfect timing from your business perspective, there could be an external event that you can't control that can impact your exit. So once you've reached maturity, it will take time and money to refuel the growth impacting the sales and profit. So if you reach maturity, you're already late for an exit, and ideally you would like to bring back the business to a growth stage before you go for an exit, because that's where you can get most a bigger valuation for your business. But then it means that you will need to reinvest, you will need to invest in more marketing, and basically this will bring your profit down. And again, this creates a problem because then your baseline becomes very low and your potential valuation decreases. If you don't want to do an exit, don't wait to reach maturity before you reinvest in the business. Start investing and preparing new products to launch while you're still in the growth stage, because you will need time to prepare these products, to launch them, to invest in people, learning about them, building reviews on Amazon, so that you don't reach a stage where you reach a plateau or a maturity stage, but you actually refuel the business for growth. In terms of exit timing, the best time to start an exit process is somewhere in the middle or in the second half of the growth stage, keeping in mind that an exit process can take somewhere between 3 and 12 months. So starting early doesn't mean that you will lose the momentum and you will lose the potential growth that you could have achieved by selling a bit later, because the exit process itself is going to take some time. But again, I'm repeating, don't wait for the perfect timing. You will not get it. Rather be early than versus being late, because being late can actually cause you to cause a decline, reinvest a lot of money in marketing, reduce your profits, and basically annihilate the possibility to achieve a successful exit. And the last kind of mistake that we commonly see is that many sellers optimize their portfolio for growth instead of for profit. Whereas when you're going for an exit, when you're planning for an exit, you rather want to plan for higher profit, even if it means lower growth. Let's take an example where we have company A and company B, which are very identical, similar companies. They're selling similar products on similar markets. But company A has decided to make promotions, to invest a lot in marketing to achieve very high growth, whereas company B is looking to have a slight growth of 10 to 20%, but actually focusing on increasing their profitability as much as possible. Now, in this scenario, you can see that company A is generating $4 million of revenue with just $200,000 of profit, whereas company B has reached half of the revenue with $2 million, but with $400,000 of profitability. It's very likely, and it's most likely that is going to happen, that company B can get a higher valuation for its business versus company A. So basically, company B will be able to be sold for more money than company A. So it's very important to plan your portfolio for profit when you're going for an exit, and that usually happens 6 to 12 months before you go for the exit. You start planning for that, and you start focusing more on the profit versus the growth. What you can do to easily achieve that is to start looking at your portfolio on ASIN level. So you can see on the left hand side that you have the graph of the sales by ASIN, and on the right hand side you have the graph on the profit by ASIN. Focus on the products that generate most of the profit, that bring most of the unit margin. So for example, you have product A and product B. Product A sells and generates only 6.9% of the overall revenue or sales, but it generates 12% of the profitability of the company. Whereas product B generates more revenue, 9.5% of the revenue, but only 4% of the profitability. it's wiser to focus more efforts on on product A, which by doing simple things and investing a bit more in marketing can bring you a lot more profit than product B. These are simplified analysis, but we can help you build such analytics completely for free if you reach out to us. I would like to mention that we work entirely on a success fee basis, which means that we will not get paid anything unless we manage to sell the business that you've entrusted to us to represent. So don't hesitate to reach out for a completely free consultation. We can help you do some analytics and help you understand a bit better your business, do these analytical graphs, and which can be a good start in your preparation for a successful sell of your business. You can see my email below. You can easily link me up in LinkedIn. Very easy to get in touch, and looking forward to hearing from you.
Yes, the email is netko@nextoria.com. And I wanted to bring back our other guests as well. Thank you, Nedko. So Alex and Jacob, all our guests are representing companies which are sponsoring upcoming Orange Klik Barcamp event in Lisbon. And you will also find each of the guest contacts, or at least the website address, in the description of this video. And some of these guests you see on the screen, you will meet during the event. And I wanted to talk very shortly about Orange Klik Barcamp. I will share my screen. So basically, this event is a bit different from regular events where people are expecting maybe speakers and stage with different presentations. Here we have attendee-generated content. We can call it an unconference event where there is no really predefined speakers, but everyone who will come during the Barcamp day in the first hour at 9 o'clock will be able to offer their session which they want to be presented during, or which they want to host or present as slides during the day. And we will have pitches. Each attendee will have a possibility to pitch their session, their topic, their idea, and we will have about 3 or 4 breakout rooms where we will split all the sessions which were presented and suggested. So in some room it might be somebody is talking about maybe about taxes, so there are maybe 10 people there. Somebody's giving big secrets how to market your Amazon product and make money. Maybe there will be like 30 people listening, and maybe there will be a small room at the same time where people will be discussing Arab Emirate expansion or selling there in Arab Emirates in Amazon marketplace in that country. So it's very like topic focused discussions in every room. And besides that, we are offering the networking day a day before, where we will have people attending this day have fun. We will do, let me find some pictures. We have a picture from the boat trip we did last time during the same event. A lot of people liked this kind of closed space, a boat. You don't need to be it's not a problem if you are seasick. I think it was like not shaking last time. It's a big boat. And we will have a lunch together and some activity in the morning as well. So it's a perfect way to get more secrets from other sellers and experts which are coming to this event. And again, if you find this event interesting, you will find the link below in the description. So make sure that you check and read more information about this event. Yeah, I don't know if you have any comments, guys. Welcome. I think today's mistakes were very kind of integrated with each other, everybody talked about numbers, about I think this is what is not very popular among Amazon sellers. They're focusing how to make sales, how to maybe make more revenue. But what Nedko was explaining, maybe they are forgetting that you need to look at the profits. And Alex explained how to do well accounting, and Jacob shared how not to have problems with authorities in terms of like VAT and other things. Alex, yeah,
Yes.
like,
Indeed, common topics on the financials.
yeah. Alex, you were in the last Barcamp event. You are going to a lot of different events for the last probably 20 years. You're moderating different events. Can you share a kind of experience how Barcamp event is a bit different from like regular conference?
Yeah, and well, the topics of the Barcamp are decided on the first day, so there is no set agenda. People go there essentially with what they have, let's say, with their desires, what they want to talk about, and people with maybe with no expectations. So one of the biggest, probably biggest differences that you have no expectations, but at the same time you expect that there will be something happening. So that's kind of the main difference. You don't know who the speakers will be, and it generally turns out how you call it, in an improvised manner. So that's something that people will, somebody who likes really control everything to be planned, predefined. Barcamp would maybe at the first appear as not something comfortable simply from that experience, but actually it is more targeted. So you could, on the day, you could decide, I like this speaker, and that speaker will get a vote. So the audience decides who gets to speak, and the topics are decided on the day, and it's a really cool thing about it.
And other tip for teams, I have to come 2 or 3 people together. It's not that we want to sell more tickets, which is nice, but also as I explained, there will be things happening in 3-4 breakout rooms at the same time. So maybe in the same hour, there will be a session about how to get email list from your Amazon purchases. And in another room, maybe there will be some, let's say, AVASK will be talking about some new rules about VAT, which you have to be, aware of. And if you are coming alone, it can be difficult to catch all the informations in different rooms. But of course, during the sessions, you can change the rooms as well. But yeah, I think it's a bit different concept, and we still need to train people to get used to this. All right, so let's do one more time the introductions, how you help Amazon sellers, and I think we will finish after that. So Jacob, can you remind us how AVASK helps Amazon sellers?
Yeah, of course. So, we help Amazon sellers across multiple services, all kind of within the regulatory issue. So international tax, expanded to new markets. Obviously, this can be quite a daunting thing. So making sure you're on top of the regulation, and kind of anything like in a similar aspect. So in terms of importing products into certain jurisdictions, keeping up with the different regulations. So whether that's EPR, which is extended producer responsibility, some of you might have heard of it if you're selling in Europe. Essentially is it's like an economical contribution that you have to start paying. And basically, yeah, we help people who are looking to go into new markets, making sure they're set up for everything they need to be set up. So, they can actually start making the sales, bringing products in, and know they're doing everything correctly.
Perfect. And Alex, what about you?
Yeah, at Chern Co, we help businesses to expand into Europe and to optimize their taxes with administration, accounting services. And we also have a legal department that looks after trademarks. So that is essentially helping businesses to remove the bureaucratic and the paperwork and focus more on growing their business.
Perfect. And Nedko.
Thanks. So generally, there is a general rule of a thumb that a seller will get 50% of everything that they have made out of a business at the sale of once they sell the business. So once a seller reaches to the point that they want to start something new or to just retire and they want to exit their business, we in Nextoria can help them achieve the most successful and the highest value exit possible. So yeah, please reach out to us.
Amazing. Thank you very much. And great. see you, some of you, in Lisbon, in Orange Click Barcamp. And if any of you watching would like to get in touch with one of these experts and companies, check the contacts below in the description. Thank you, Jacob, Alex, Nedko.
Thanks, Augustus.
See you soon.
Thank you
Bye,
very
everyone.
much. Have a good
Bye.
evening.
And now I would like to invite you to watch other video. Actually, it's the whole playlist where you will have a collection of videos about global expansion of your different marketplaces and different regions and countries. Check this out.